Hello traders, happy weekend. Vladimir Ribakov here from Traders Academy Club, and welcome to the Forex weekly review for the week starting of 15th to the 20th of July 2018. Previous week was let's say boring in some pairs, amazing in some other pairs. It's very important to remember it's summertime. A lot of the big money is out of the market currently, so the moves can be affected, of course. Lower volatility, lower longer term positions, which means lower money flow. So it has the impact. But on the good side, a lot of fundamental things cause the market still to try and to find the direction on the longer run. If it's all happening in Britain with the Brexit, if it's all the sensitive, like bomb sensitive situation between Trump and the rest of the world, mainly China and Europe, with all the tariffs and with all the trade war in between the countries. So it has the impact definitely, and we do need to pay attention to that. Plus, it's going to be another important fundamental week. It starts with the GDP in China, which would be effective on the Pacific pairs and the yen pairs. It goes with the retail sales and core retail sales in the US, which are expected to drop, as you can see. It continues with the CPI in New Zealand, monetary policy in Aussie. A speech from Carney and a speech from Powell on Tuesday. CPI, another important factor in Britain. Another speech from Powell and the CPI at the end of the week in Canada. So that's the main things, the main events to pay attention to this week. And now on the technical side, let's see what do we have. But before that, I would like to thank you for finding the time. Watch my videos. As always, I hope this video would be helpful for you. Will give you some ideas where to focus this week and where are the best potential setups this week. The way I see that, of course, I might be wrong, and that's only my own ways and views, so I hope it's helpful for you. If you enjoyed the video, please show your support back, hit the like button, drop your feedback on the comments below. If you would like to ask about any of the instruments that are not covered here, please let me know also on the comment section below the video. On Monday we will publish the weekly review, the PDF version, so just come back on Monday. And on the comments and in the description also there will be the link with the PDF. We do that for you to give you the written review, written mode review, so it's easier for you to follow. So once again, your support, our motivation, and thank you in advance. So the euro dollar is the first interesting pair on the list. We're still talking about the special cycle that the pair did and the correction we expect accordingly. So far it was following our plan exactly from the previous week. Our idea was to get the corrections down in two waves, and we are there. It's created, it's done, it's holding currently the trend line, the supportive zone here. So far looks good. So on the short term, the rallies for the euro are still acceptable. I just want to remind you here, it's very important for traders to remember and to understand it's for the short term, because these rallies, unless there will be some fundamental change, expected to end. And we are currently in corrective cycle after the special move we got on the daily chart, the special cycle I just showed. And the correction could be in one of the two ways. Two waves upside or a range. The way it looks right now, we are stuck in a range, and that's why we got this correction from the previous week. And now we might go for the second leg. Second leg could be short enough to stay inside the range itself, or to try and fake breakout it before it moves lower. So for the long term, the plan would be to sell this rally once it's completed. On the short term, we can expect this rally to take place. So as long as this trend line basically holds, and as long as this supportive area is respected, the euro-dollar buys make sense. And at the top of the rally, with the reversal signs to the downside, we should be looking for the sell opportunity. Same with the pound dollar, which so far follows the previous week plan 1-to-1. Our goal was to get the break above this high, which we did, to get triple wave, which we did. From there we expected two waves correction, which it did. And now the question is, will the pair be able to continue higher? So we have the false break here, we have a false break here. It might turn to be a range, right? It doesn't matter how we turn it around, as long as the last low holds, the corrective cycles are more than acceptable. Now the pound has a very serious bounce on the last day of previous week, mainly due to the rumors, Brexit, and all the things and all subjects coming out of that, and the expectation from this week's CPI. The CPI is expected to be 2.6 versus 2.4 on the previous one. That's positive signs for the pound. Carney already mentioned in the past that the central bank in England is getting ready for possible hikes on the coming years. It starts to put the pressure. And on the short term, as long as we respect this invalidation, I would not be surprised if the pound dollar tried to go ups again, and everything would remain relevant as long as we are still inside this pattern and holding the above the low. If we break below this low, then the longer term level for the pound dollar would be sorry I need the cycle level, would be the 127 to 128 area right here. So if we manage to get below that, right, this is the place where we would expect the pound to drop. But meanwhile, while we are holding, I would not be surprised to see the pound trying to climb to the top of the range, or, as in the previous case, two waves correction. Two waves correction could lead us towards 61.8, which would be top of the range, right? The 133 area. The duplication around 134, and who knows, maybe even the 136 for a full extension of 161.8. Euro versus the pound is one of my favorites for the long term, not a secret. So this is the pattern we have. We are looking for top of the rally and sells. Now on a daily chart, we got double cycle with a bearish divergence right here. So for conservative entry, we would like to see the break of this trend line and then sell the rallies. For more aggressive setup on a lower time frame, we got a triple cycle from the 4-hour chart, false break, and trend line is broken as well. So the best thing here would be at least to see that going and making the lows and looking to sell the rallies. So from my point of view, it was bearish, and now it's getting to very interesting setups, both aggressive and both potentially conservative if it makes this low, and we should be ready for that. Dollar versus the yen is another interesting pair on the list. Now I was looking for sell setups here while we are below the weekly trend line, and my idea was, as long as we hold the range, to get the break below this trend line and start looking for the sells. So the idea itself was completely wrong. On the good side though, it never was activated because the trend line never was broken, not the daily and not on the 4-hour chart. Nowhere we got a real sign for sells, and what happened instead was the break of this pattern and the continuation higher. Now the dollar yen is on critical place. Why critical? Because we do have the 61.8 expansion of this cycle. It is also a duplication of the inner cycle. Critical area around the 112 here, which means we can see the dollar yen starts and make the correction down. We need to look for good setups for that, like false breaks, like turnarounds with creating lower lows, trend lines broken, right? Great candle patterns, all that would have the impact on it, of course. What is that? Here. And we do need to pay attention to the dates, like take a look here. 15th is a critical day for a top, and we kind of have it right now. So as long as it holds, we can expect a pullback. It could be a pullback, or it could be just a short-term correction, but we have the levels. If it doesn't do it from here, the next important dates to pay attention to for statistical retrace would be on the 2021. These levels are definitely worth to watch. Now we are on 61.8. If the dollar yen does not manage to start the reverse, the next important level to pay attention to would be 115. From there, after the clearance of the last highs, we can expect a big drop. Now, from my point of view, dollar yen is currently mainly for the short term. I don't see any pattern combination from a weekly and a daily cycle. It's mainly on the short term currently, and it's important to remember that. Why? Because we tend as traders sometimes to enter a position and say, "Oh, I'm going to profit big here," but when the higher time frames don't have these signs, it doesn't make any sense to think about, "Oh, I'm going to profit big here." So that's for the dollar yen. Definitely interesting opportunity from my point of view. Next one on the list is our Aussie Kiwi, a pair that we have been looking to go for bullish as always, and it remains bullish from my point of view. The 61.8 made the correction down. It refused to do two waves as a classical way, right, like this, but it was creating for us kind of a range here, well, with wider ranges. So I would not be surprised if the Aussie versus the Kiwi would continue higher. Next important level for this pair is the 100 duplication, and the 100 duplication can be far away here, around the 111, 112. So from my point of view, this pair was and remains bullish. And if we get, we have here critical trend lines, right? 1 and 2, right? Following up, and we have the supportive area right here. So any pullbacks like here or like here would be considerable as a buy opportunity for the pair. Next one on the list is going to be the Kiwi CUD, another pair that we have following on the list. The plan was sell the rallies. We got the rally, we got the sell. Now the pair could make attempt for a second rally, so it could make something like that. Every kind of a rally happen on this pair would provide us a sell opportunity. So according to the weekly and the daily, I expect this pair to drop lower. We have this cycle to be completed, we have this to be completed. It should take us down. So every rally you get on the daily 4-hour chart combination, look for the reversal signs on a lower time frame, like the 4-hour, 1-hour, and look for the possible entries. I'm not talking about the 5 minutes here. That's not trading in a cycle. That's good for scalping, definitely not for cycle definitions and the reversal signs. So that's for the Kiwi CAD, which remains interesting. Now crosses like pound Aussie, euro Aussie, they're stuck in ranges, so I don't really have them as for now for the weekly plan. I will cover them in the live rooms during the week as they progress and provide opportunities. They don't provide anything interesting currently. So for all those of you who love the special crosses of the pounds and the euros, they currently have no real sign. So I keep them on the watch list for the week, not for the current weekly review. So what do we have on the gold and the rest of the commodities? Gold is dancing around at 1240, trying to clean that, still has the divergence. If it turns to be a false break, that's a great sign for a buy. If we get the breakout and hold, we are going for 1220 area, and this is why we have this cycle before and it's developing right now, right? This is the critical place we have right here, and the next important leg would be slightly lower. This is actually this is the next area right here, okay, and the clearance, of course. So it's critical place for the gold to start looking for the possible buy opportunities. Look for this divergence, drop to lower time frame, and look for the combination of divergences there as well. So we do want to see the divergence here taking place, right? And then mark yourself the trendline breakouts or false breaks. My favorite style: false break, higher highs, and retrace, right? As per statistics, we also have very interesting data for the gold, as we have it here. 15s, right? 14, 15, very powerful days, which we need to pay attention to. If it managed to hold, as we said before, we can expect that to provide us a great buy opportunity. If it doesn't hold here, the next important days and the level to match together would be 21 to 24, 20 also. So after the 20s, we are looking for the next stop if it doesn't hold this week at the beginning. And as per indices, DAX remain to be one of the only interesting ones, as long as we are below the invalidation area. We want to see sells. Currently the DAX is making the second correction. We got this short-term sell during the previous week. Now it's making the second leg. We want to see this and divergence forming and sell coming in place. And on the US indices, the plan for the NASDAQ, which I had previous week to get sell with the break of the trend line, never got activated, unfortunately, and we are now above the invalidation area, which means, as for now, game over for the NASDAQ. There is nothing to watch out currently right here. As per cryptos, we start to see some very interesting combinations here. This is the Ripple, which is trying to create a double bottom. So if it managed to get us breakout and making higher highs, that's a wonderful buy opportunity. More and more interesting positive news start to come from the crypto world once again. So it's a good time to pay attention to this. Bitcoin also holding its lows. We do want to see that gaining highs, right? And after the highs, we can start again looking for the buys. We need this momentum to happen first before attacking. And a few more to pay attention to. That's Dash, which starts to be amazing opportunity by itself with a second false break to form. This is the high we want to see broken, and then it is buy retraces for us. Same with Ethereum, and same with the Zcash, which starts to be interesting as well. We do have the false breaks. We do have the attempt for a break of the highs. We want to see that going above and then we want to go long here. So basically they all pretty much represent the same, and I would not ever go with overexposure in current market conditions of the crypto, simply because the real momentum is, as for now, gone a bit, but definitely look to trade it, because we have amazing levels, divergences, and possibilities for a fly. We know how this market basically behaves. The moves can be completely sudden and huge, right? The moves can be immediately 10, 20, 30, 50%, something that we cannot see on Forex market. So be there, watch it. Once you get a setup, don't let it go. It could become amazing profitable. That's all for this week. Thank you very much for watching this video. I hope it was helpful for you. And I'll see you in the live trading rooms in the Traders Academy Club. Your support, like, and the feedback below the video would be very much appreciated. After all, I do that for you and for your trading. So thank you once again, and I wish you a wonderful weekend and happy week to come. Good trading, successful one. Yours, Vladimir Ribakov, Traders Academy Club.